Hello guys, good morning. Welcome to the Trading Parrot. I'm gonna do the market open update starting with the fair value gaps, and I want you to observe the fair value gaps that we currently have right above the price. They span first into 95,756, then we have 96,300. Those two at the moment are making me think that there might be a push higher at this point in time. I'm also wanting to discuss with you this potential new support that we are forming at 94,400. When we get into the order book, you're going to understand what I mean. So hit the like, subscribe, write down a comment down below. If you appreciate these shorter videos early in the morning, as soon as I wake up, you can see I go straight into the charts and I have a look. This is something I used to do back in the day, but I have been a little bit laid back after the holidays, and I'm trying to get back into this routine because it really helps myself with my own trading as well. So if you like that, hit the like. Let's go into the next chart. Before that, so if we go into that 96 something and we see a rejection and that turns into support, I'm going to be looking for the two fat fair value gaps that we have here, starting from 91 into around 85. Of course, I'm not assuming we can take everything, but some of that, if we take it, will make a lot of sense, because around here there is, starting with the CME gap from previous weeks, we also have this fair value gap, so that is a good incentive. There's not much liquidation levels around the brown area. The liquidation levels start from 98 to the top, but it still is attractive because there's also the CPR virgin month that I've been mentioning in the previous videos. Speaking of which, let's go and see how close we are getting to hitting those pivots. So the pivots are located starting from 91,100, and we have been just hovering the previous support, which is 93.6 on a closing basis for hour. But you can tell that 94 and something is what's currently holding the price. I presume there's something around the daily there. Let's go and have a look at the rest of the charts. Let's go with 4 hour for now. Let's go with 4 hour because that is also gonna give us the view of the RSI. Yesterday I was mentioning in Telegram, Instagram, that there is a double bottom formation on the 4 hour, and that at the very least is telling us that there is a price tagging right here. It's just going sideways because tomorrow there's the FOMC meeting. Today is bank holidays in Asia, in some countries, and that's going to contribute to basically people thinking, okay, I'm not going to do anything until I get the FOMC. So this sell off that we've seen potentially is going to stop there by the W pattern, but now it's got the momentum resistance on the 4 hour. If it wants to turn bullish, it needs to reclaim 47. So it needs to break the neckline, and then it can take us back into around 57, let's say. So let's see, the bottom is 37, so it's 10 points up on the other side for hour. If we see a breakout to the upside, it can easily get into that, and probably is going to meet with the white line and do a revenge retest. So if it does that, yep, great. That will be playing out the double bottom. If we get a rejection from 47, we can do a new low and get into the 30s or into the 20s on the 4 hour, in which case I'm gonna be really in profit from my short. I'm still in the short, if you wonder that. I have one short on Bluffing and one on Bybit. You can find links in the description to get discounts if you want to use my link. On the daily, yesterday I mentioned that we have a hive signal, bearish, pointing towards now around 89. That is an aggregation of bearish divergences from multiple indicators, and the target is 2 times the daily ATR. And that's what's pointing now to 89,500, but it hasn't broken down yet. So it's still holding that level of 94,200, which I think is very important because it held the price to push into 97. That's why people say, okay, that's where we stop now. We're going to put bidding orders in the order book, which is what I'm going to show you just in a second. Daily breakdown, 4-hour breakdown, but it found support now. So we need now a decision. Are we going lower on this, or are we going to start now pushing back up straight away? On the MACD, though, is saying that the momentum continues to go lower, and today, precisely today, has the responsibility of either confirming a bearish cross on the daily MACD versus undoing that, open up the mouth if there's something bullish, if the price hits over, let's say, 100K and I'm forced out of my short position, then this bearish divergence, bearish cross is going to undo and potentially open up the mouth again, which will be really bullish. But so far, it's looking like we're gonna cross that cross before the FOMC. So by end of today, we might get the bearish cross. We'll see how that contributes to the FOMC meeting tomorrow. I wanted to show you something else, the CME gaps. The CME gaps, no news on this, but just want to show you that the current state at the moment, right? So we have the CME gap right above the price that can drag the price up together with the fair value gaps and with the support at 94,400 versus breaking down 94,400 and going into the CME gap. That's my first initial target for my short. If we don't get there, well, that's fine. I'm going to have to change plans. I'm always open and flexible, and that drives people nuts on Twitter. You are short and long at the same time. They cannot understand, my mentality, but, that's how I never lose in the past year. Whether you like it or not, I'm not bragging. It's just the way, the style of trading. Some other people get annoyed that my leverage is not that high. They want me to go beyond 5x. Well, either you put the leverage high or you constantly win. You decide which one works for you. I could lose more by increasing the leverage, but for my psychology, I really like winning all the time. It's up to you. If you're fine with losing every now and then and moving on and then making bigger returns on higher leverage, and that works for you, there's nothing telling you to stop. It's just that I don't like the liquidations and the fee for the liquidation and all of that. So I prefer to stick to 3 to 5x. That's fine. All right, so let me see if I have any other chart that was important today. I show you CPR, perfect. Okay, cool. Let's go now into the order book that I have it ready here. And we have 47 longs, so they have come back, okay? And we also have, I think I was seeing some negative funding rates. Let's wait for this to fully load. It takes a few seconds and sometimes it goes into the negative. No. Okay, so funding rates are positive. Maybe it was just an issue with the website that before I was seeing it. And what's new today? Look at this. Look at all the red across this whole new range around 94 below. You see that the ask is dominating all the time up until now, up until today, and then it spikes to 0.9. Is that a lot? Well, relative to the previous pump in here, it's not a lot, right? We were at around 0.15 to 0.20. Then we've been all red in here, and now we're starting to be 0.9. So that's something. That means that there are orders at the moment defending the price from continuing down. They are expecting a move up. That move up is not guaranteed to go to 100. It could just go to 97, and still when you look back, you're going to say, oh, I missed that 0.09. That was holding the price. Well, I'm telling you, something is currently holding the price. They could rack pull, they could execute up until 95, up until 97, or if you get lucky with a long, it might hold up until 102, just saying. And let's have a look at liquidation levels as well. Who is in risk at the moment? And there you go. The shorts are in risk, and there is 240. You have those fair value gaps to the upside. I am going to stick to my short because sometimes this doesn't play out, and then I miss the final target. but this could be an opportunity to hedge a bit with a long, if that's what you want to do. I'm not going to hedge from here. I'm planning to hedge from lower if we get lower. But since there are some liquidations of shorts, we might get a bounce up into, as I say, 95 something, 97 something, or 100 possibly. With this, remember that we are expecting big volatility in the next day because of the FOMC, and that's definitely the case. Liquidation levels of the past month, 82, just a reminder. And let's see liquidation. Oh my god, I didn't load this. Let me load it for you. Let's go with it. Scalping on Binance. There you go. That was quick. And let's see how the ceiling, the rooftop here is getting heavy. Let's focus on this area. That is an area of concern, definitely for my short. Remember my entry, one is 97, one is 97.5, and we're getting heavy at 98. If we go just to 98, that's fine, but this 98 is turning the pan very oily in here to get into 100K, if you know what I mean. And if it gets too oily, this area, you could slip all the way into 102, 103, and that can turn my short a little bit more dangerous. And I was having a conversation in a comment with someone that was saying, what if we just go to 102 and then you crash from there? You're gonna get stopped out or close your position, and then you're gonna miss a short. Well, there's always this discussion. It depends how we land in 102. Let's say I wake up in the morning and I still have the position at 102 and I'm in a loss, but I see something really weak in the market, I might add to my short. You know, I'm always flexible. It all depends on how things are looking in the order book and in the rest. Let me know if you found this update useful and if I should go back to do this in the morning, in the evening. If you're okay with the format, with recording from my phone, I'm happy to do this. I cannot edit a video at 8 a.m. in the morning. That's the only limitation. I'll see you in the next one. Take care. Bye-bye.